What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the week ahead. These stocks include names like Apple, Nvidia, Tesla, AMD, and Amazon. We're also going to go over VIX, which is the volatility index. We have noticed a very sharp drop in volatility recently, and this is important to note. We will explain why in the later parts of this video. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that last week the market booked a very strong upside rally, but despite that rally, SPY was not able to get back above a very critical point, and we'll explain that in just a second. But let's talk about what happened last week and what could happen this week that could potentially send us further up or send us back down. So last week, we saw the unemployment rate jump from 3.8 to 3.9%. There were multiple labor market reports last week, and all of them indicated a softening in unemployment or a softening in the labor market at all. So unemployment jumped and the market reacted positively, which is ironic. However, the Federal Reserve were very clear that at the start of their interest rate hike cycle, there will eventually be an uptick in unemployment, which is exactly what's happening right now, and the market is reacting positively because it appears that plans are following through as expected. Higher unemployment means consumers have less money to spend. Less money to spend means less demand, and finally, less demand could soften prices and bring inflation back down towards the Federal Reserve's 2% rate. So apart from unemployment, last week we also saw the Federal Reserves hold their FOMC meeting. This is a 2-day event, and on the second day they decided that they will hold interest rates steady at 5.5%. So if you have kept up with the Federal Reserve for the last 2 years roughly, you know that the Feds have been raising rates, and they raised rates for 11 cycles straight, except for last meeting and this meeting. Last meeting, the market had a very negative reaction to them holding rates steady, but this time around, the market reacted very positively. In fact, we can clearly see the jump on Wednesday after they decided to hold rates steady. The market rallied for 2 days to follow. So this decision is good for the markets because higher interest rates are bad for stocks. And so if there is a signal that the Fed is not going to raise rates anymore and eventually turn rates back down and lower them, that is great news for the market, and it sparked the rally that we see now. Last but not least, we did see one more positive signal last week, and that was from the Treasury Department, and we will be sending the explanation on that via our newsletter, so make sure you subscribe to the new link below. We are starting our newsletter, and we're excited to share it with you guys. If you are interested in getting it on a weekly basis, we will be sending it out, and it'll explain everything we're talking about. So now going into this week, markets will be getting a little bit of a relief from the high intensity earnings and reports. So we have already gotten Apple out of the way, we've gotten Microsoft and Google and all the big tech names out of the way. Now we're focused on small and mid-cap companies such as Uber and Disney. And finally, this week we'll also be getting the Consumer Sentiment Index, which is expected on Friday. So not as intense of a week in terms of economic and earnings reports as last week, but still nonetheless a very important week. So now let's talk about our technical analysis and jump back into SPY. We've already talked about it on the daily chart. However, let's go ahead and cover it in detail. So we noticed that last week, despite the rally, we see that SPY was still not able to get above its October highs, which were trading right around 438.60, which is where we saw this strong rejection back down. So going back as far as July, we noticed that this market has created the same exact pattern over and over again, where it would rally, get rejected below the previous high, and move back to make a lower low. So here in this case, SPY could be creating the very same pattern again, and you notice that as long as it's below that 438.60 mark, it is at risk of turning back down. So this week and next week, throughout November, we want to see SPY to try to get above that 438.60 mark and close above it for multiple days to confirm the breakout. At that point, the very next price target we have for it is going to be right around 443 to 445. To the downside, if SPY is not able to get above this level, it does have a support at 429.84, which is a possible pivot point, so we will not take puts unless it breaks further below at 426.30, but we will note if it breaks below 429.84, it could be pivoting back down. If it breaks below 426.30, then our downside price targets are as follows. Before we jump into the next stock on our watch list, we also want to talk about SPY's moving averages. And we noticed that last week and the week before, SPY was able to get back above the 200-day moving average. And if you've been watching our videos, you know this moving average is very important to us because the last time we dipped below it and moved back above it, the market went on to rally for 3 months to follow. So this could be the same exact thing happening right now where the market recovers back above that 200-day moving average and continues its rally into 2024. Now the next stock on our watch list is going to be Apple, which reported earnings last week, and even though their sales came in a little light, Apple still managed to beat analyst expectations and the stock reacted positively. Now the stock did not move as much as other stocks moved, like Microsoft for example, or other stocks in its industry. However, it did move in a positive direction, and that is worth noting, especially on strong volume. So if you're looking at Apple on the shorter term charts, here are your levels to follow. You have a very strong resistance around 182.35, which stems from this leg here. So just like SPY, we do see a resistance that could potentially reverse Apple's trend, but as long as it's below that level, then Apple can turn back down. So here in this case, Apple will need to get above that level, and its positive price targets are as follows. 190 is another very strong resistance, which was this rejection here where we saw a large downside move. To the downside, Apple has a support right around 173.30. If it breaks below that support, then it has a downside price target around 167.90, and its most critical support is going to be 165.30, and that is this level here, which it got reversed from right before earnings. If it breaks below that level, things can get very ugly very quickly. The next stock on our watches, which is one of the big tech names that has yet to report earnings, but it did get a positive boost last week because AMD reported earnings, and we will talk about that in just a little bit. But for now, let's talk about Nvidia, which was able to get back above all of its healthy moving averages. Remember, the moving averages we have on our chart are the 10-day moving average, the 20, the 50, the 100, and the 200-day moving averages. Here in this case, Nvidia got back above all those moving averages, and the most important being is that 50-day moving average, because Wall Street and institutional traders use that moving average as a guide to whether the stock is currently in a bullish trend or in a bearish trend. So now Nvidia is slightly back above that level. So coming into this week, the first thing you should do every day is look at the daily chart and see where Nvidia's daily candle opened in relation to that moving average. Above it, it's a positive sign. Below it, it's a negative sign. So here are some important levels to watch on Nvidia. If you are looking at it on the hourly chart, we can see that Nvidia did have, like the rest of the market, a very, very vertical rally last week. Vertical rallies are typically pretty uncomfortable to trade because you really don't want to chase the stock up, and sometimes the stock can just suddenly turn back down on you. So going into this week, we want to see some consolidation, and we want to see it from across the market. We want to see the markets move sideways for a little bit, cool down before gearing up to move back up again. So in Nvidia, we want to see Nvidia maintain the 437 support during that consolidation period. If it dips below it a little bit, that's completely fine, but as long as it holds that 432.40 mark, that is good news. The reason why 437 is such an important support is because this is the level that Nvidia got rejected at before it turned back down very sharply. So now that it's above that level, we want to see buyers maintain that support in order for Nvidia to reaffirm that level. So if it does and it continues to consolidate above that level and buyers continue coming in at that support, the resistance we want to see Nvidia break out above is 455. Above that level, we have a price target of around 463. And above 463, we have a target around 476. This is a very aggressive price target, so we will be updating these levels in the coming videos. Make sure you're checking back in and subscribing for those videos. To the downside, if Nvidia can't hold 437, the level we would consider taking a put or a short position below is going to be 432.40. And at that point, we have a gap fill to fill into around 423, which is right down here. And we have a second target right around 417 to 418. The next stock on our watch list is going to be Tesla, which was able to recover back above its 200-day moving average last week. In fact, it was one of the stronger names to our surprise, but nonetheless, it is still below that gap down from its earnings. So here are some levels to focus on for Tesla if you are watching the stock. You have a support right around 215.50. Below that level, Tesla can move towards 208. But sellers aren't going to take full comfort again until Tesla is back below all these moving averages, including the 200-day and the 10-day moving average. If it breaks below 197.85, then the critical support is 191.25, which stems from the bottom right here. If Tesla moves below that level, then it can get very ugly very quickly and move down towards 178. The next stock on our watch list is going to be AMD. And if you know anything about our past videos, AMD has been on our watch list for the longest time, and we have been watching for that breakout above 112, which it finally gave to us. So the reason why 112 was such an important breakout for us was because AMD had gotten rejected at that level once, twice, and 3 times, which is a triple top pattern, which is a key bearish pattern. If you are interested in learning more about patterns, we will leave a link in the bio. You can take a look at all the patterns that we follow. So here in this case, AMD is back above that 112. We do expect it to dip back below it this week, and if it does, we don't expect it to reverse. We just simply expect it to come down below it. There will be buying and it will reverse back up. So AMD has the next resistance now at 113.40, and where that comes from is the rejection on Friday, which was a slight rejection right around 113.40. AMD will need to break above that level in order for it to see continuation towards our 119 to 120 price target. If you are in our premium membership, we are holding this stock, and we will be holding to our price targets, which are a little bit higher than this. We will be updating those price targets for our video watchers in the following weeks. To the downside, AMD has a strong support at 105.90. If it breaks below that level, then we may consider a bearish position or a put position down towards the 102 to 103 mark, and the second price target below that would be right around 100. But overall, we are bullish on AMD. We want to see it hold 112, and we also want to see it hold this 100-day moving average on the daily chart. Last but not least, the final stock on our watch list is going to be Amazon, which we were very bullish about in our last video, and it proved to be correct. You can see that Amazon made it back above all of its healthy moving averages last week, and it's trading very strongly on the daily chart. The MACD is crossing up, multiple moving averages are crossing up, so Amazon is looking very good. But we will be watching these levels because you never know how things change. Here are some critical levels to watch. First things first, we have a resistance right around 139.37. We need a breakout above that level for Amazon to continue towards 141.75, and the second price target right around 144. To the downside, we do expect a pullback from Amazon. It is very obvious that stocks need a pullback because look at this rally. It is too vertical for its own good. It does need some breathing room and a cool down period. So Amazon here in this case, we are expecting to pull back. So if we are taking any call positions, we are taking them for a multiple week expiration. We are not taking this week expirations for our swings. We will give ourselves some time for the market to consolidate and cool down before it rallies back up. To the downside, we have supports at 136 and 134. Amazon is still considered strong above that 134.17 level, but we wanted to see it maintain that level because this was the breakout from this rejection. If it breaks below that level, we would consider taking puts down towards 130, and below 130 we have a price target around 127. Now we're going to go over VIX, which is the volatility index. The volatility index fell back below the 200-day moving average. This is very important to know because the volatility index goes up when markets are coming down, and right now we are seeing it cross back below all of its key supports, so it could indicate that the market rally is just starting and the volatility index is going to come down. Now the volatility index makes options cheaper, and the reason why is because options have an implied volatility measure, and the lower the volatility index is, the cheaper SPY options in specific are going to be, because implied volatility is part of the options premium or the options pricing, and when that drops, the options pricing is going to drop with it, making it cheaper for you to buy and sell options. Now, as promised, let's go over the option chain for each one of these stocks for the next week and talk about some things that we should know. For Apple, we are not seeing as strong of a bullish open interest as other stocks on the market. In fact, we are seeing an uptick in bearish or a put open interest. So here in this case, we can see that there are 30,000 contracts open for the 170 put strike. We do need to know that Apple was one of the weaker names on the market last week compared to its partners. We can see that Apple does have strong open interest. Now, there is strong call open interest into the money, which is something that we like to know because in the money contracts are more expensive, so those are where the big players are buying. But nonetheless, we should note that there is about 30,000 in open interest on the 170 mark, which could mean that Apple is going to see a pullback this week. Remember that open interest updates at the very start of every day, so you should be looking at open interest to see if there are any critical changes or if there's any one-sided changes every single day. Nvidia is the next stock we should take a look at for their option chain, and we can see that Nvidia's option chain is lighting up on the bullish side. There are nearly no open interest contracts on the put side or in the money contracts. You can see that it's all around zero, so it's very clear that buyers are bullish on Nvidia this week, and so are markets. But just remember to check the open interest at the open of every single day to see if there are any dramatic changes. Tesla, like Nvidia, also seeing strong open interest on the call side, but it does have also put open interest that is about equal to the call side, maybe on the out of the money puts, but in the money calls are definitely stronger than in the money puts, and that is something to note. Buyers are strong on Tesla coming into this week, but nonetheless, you should check that every single morning to see if there are any dramatic changes. AMD for November 10th as well. AMD strongly bullish open interest. You can see that it's in the thousands on the call side, whereas on the put side, not so much. There's not much open interest on the put side, but that is open to change. Last but not least, we have Amazon, also strongly bullish open interest on the call side, but we are noticing that there is also strong put open interest, maybe not in the money contracts, but nonetheless, there is still an expectation that Amazon could pull back this week. So thank you guys so much for checking in. I hope you found this video helpful. Don't forget to subscribe and like, and best of luck.